Markets, and this isn't funny, they've tumbled this morning with bank shares again taking a huge hit. Within minutes of opening, the FTSE lost 10% of its value, and a few minutes ago it was down by 7.6%. But how does that actually compare to previous dire days? Are we imagining a worse scenario than we've actually got? Well, let's take a look. On Black Monday in October 1987, shares in London fell by 10.8%. And the next day, they slumped by a further 12.2%. The Wall Street crash of October 1929, take a look at that. They saw a fall of 12.8% on those days on the New York Stock Exchange, which triggered the Great Depression. For the very latest from the city, let's speak to Howard Wheeldon of BGC Partners. Howard, I mean, it doesn't look good, does it? A 10% fall on FTSE. Why did that happen this morning?
No, it doesn't look good. It's torrid to watch, and indeed it is quite surprising to the extent that as we left last night, it was looking a little bit better, and that markets were beginning to sort of settle down. What's caused it? Well, it's industrials. It's the fear of recession. We might be doing pretty good work in sorting out the capital markets crisis, i.e. the banking and credit market crisis, but it's the aftermath and the overlap of that into the recession fears, and most Americans are thinking that it's going to be even worse. The industrials are now being hit. So that's the essence of it. It's bad. It isn't as bad as we have seen, as you've just recounted, in previous years, or in some of the days that in the UK, particularly in 1973-4, but it's bad enough. This is a global crisis, and of course we're in global markets today, very different.
I think we're hearing you loud and clear, but I mean, this kind of level of jitteriness from the markets after a £500 billion pledge, does it actually put that rescue deal in some jeopardy? If you're not going to react well to it, what's the point?
No, I don't think it puts it in jeopardy at all. That has to go on. But I think what we will see is faster intake in terms of pushing interest rates down. I would be very surprised if interest rates went cut yet again next week, and we've already had half percentage point fall this week. So the authorities will need to act even closer together and faster. And hopefully the G7 meeting this week, they have a great opportunity to actually do that.
Well, thank you very much for speaking to us. We'll let you get back to it, and I'll just turn to my gods on this, because I mean that is really a rather worrying message coming from the city. Normally we've become used to Mondays being very bad days. Friday you see a little bit of a rally. Now on Friday we're seeing really quite desperate panic, not just here but around the world.
Well, I think in America there's great fear over the health of General Motors, which is a real bellwether stock. And I'm interested in what he was saying about the fear of recession, because James Pennell virtually admitted we're in recession. That's the Work and Pensions Secretary. I'm not an economist, I don't understand it, but I thought they might cut interest rates more, because I know the Bank of England's still wittering on about inflation, but when you've got a recession, we're going to have deflation of a massive scale. So why not stimulate the economy by 1%? Because I went to a dealing floor the day the cut was announced, and everybody there was saying by next week they'll have to cut another 0.5%, if not more.
Do you know, I mean, it's an interesting thing, because we do often get emails and texts coming into the programme saying, actually, what all you're doing, you journo types, are talking up a crisis. But this is a voice coming from the city. We heard another voice, David Buick, who put it this way, saying, actually, this is threatening the very fabric of society. Hyperbole or real fear?
I think it is real fear. I'm talking around Westminster this week. People here, and a lot of them, perhaps like Andrew and I, are not the most expert in economics, but nevertheless, they're talking to the people that do know. They really are genuinely worried. Nobody knows where this is going at all, and I think it is that serious. And I think everyone's saying now, as Andrew says, that deflation is the real fear now, not inflation at all. And it seems perhaps they're just a little bit behind the curve again at the moment.
So, I mean, is it a little bit? I mean, whatever happens, because this is such a global picture that we're seeing, and every newspaper front from every country around the world, pretty similar. You change the language, but the message is the same. Is it a little bit like a government actually thrashing against the sea? You know, like one of those old Irish heroes that we read about. There's nothing really that anyone can do. This is just going to have to play itself out.
I think think it is. I mean, the Prime Minister cannot cut interest rates because he gave independence to the Bank of England, but of course he can have a word in their show like here, as can the Chancellor. But the Chancellor has proved himself, I think, again and again to be utterly ineffective. The Chancellor talks to the market and the market ignores him. The Chancellor talked to Northern Rock Invest and said, there's no need to withdraw your money. They did it in even greater numbers.
Well, I tell you, I know Jackie would want to come back on that, and we will in a little while, and expand much further on that. Now, though, the taxpayer is riding to the rescue of the main UK banks. And this, of course, has dominated news agendas this week. But what are the effects on the wider political landscape? Well, with some in the government calling for a fresh debate